Thank you very much, Carmen. Good morning. Welcome, everyone. I would just like to begin by acknowledging the Indigenous peoples of the lands that we are on this morning. Today, like most days, I find myself on the Matagami First Nations in the Treaty 9 territory. As leaders in our community, we must commit to economic reconciliation. Under the Truth and Reconciliations Commission of Canada calls to action number 92, that states the corporate sector in Canada to adopt the United Nations Declaration on the Rights of Indigenous Peoples as a reconciliation framework. I would encourage you to take a brief moment. It is not a long document, but to review it and understand ways in which we can work with that as a living document. How have you promoted or committed to your region's treaty rights today? Or if you are on unceded territory, how best can you promote their economic prosperity? I invite you to join me in reflecting upon those questions as we move through the presentation today. As a result of the discussions that we'll be having upon succession planning, primarily, I do wanted to take a quick moment to celebrate and promote the recent acquisition of Boards Rentals by Attawapiskat Enterprises. It shows that economic prosperity within Indigenous communities is alive and well today in our community, but more work is obviously needed as we continue to walk the path of reconciliation together. I would ask that you submit your questions today into the Q&A box at the bottom of your screen. Please note we'll do our best to answer the questions as time permits. I know that Danielle and Ryan, who are joining us, will likely be able to answer those questions as we move through the presentation as well. I would like to inform you that your participation today remains anonymous and that you can ask questions anonymously by selecting that option in the Q&A box. Welcome to our session entitled Blueprints for Business Transition, Two Sides to the Coin, with Danielle Zenier and Ryan Perkins of Zenier Financial. Undergoing transition themselves, I can think of no better example than to hear from these two professionals joining us. My name is Cameron Grant, Senior Policy Analyst for the Chamber and your moderator for today's session. I wanted to extend a special welcome to any business or organization joining us across the 32 Northern Chambers of Commerce. The Chamber continues to reflect and facilitate programming under our Reimagine Resiliency series, a series to ensure our businesses can navigate any storm. Under the succession planning pillar, proudly supported by Zenier Financial, Maisonneuve Dawkins Lawyers, and MNP, we welcome Renee, Ryan, and their team who will guide us through today's session. Transition planning can be daunting for any SME who lacks appropriate resources. In 2019, the Chamber reported that 73% of small businesses in Timmins lacked a viable succession plan. This came as a concern as 78% of those surveyed indicated that they would look to sell their business in the coming 5 to 7 years. Now, obviously, in 2022, that timeline is much shorter, and the Chamber looks forward to launching our recent benchmarked succession planning report in the coming days, so please keep an eye out for that. Today, we hope to provide participants with information that assists in building capacity regarding succession planning. I want to take this opportunity to mention that those on their local Chamber group insurance plan can look to access a retiree plan coverage should you be approaching that stage of your business life cycle. Reach out to your Chamber for more information. I want to extend a sincere thanks to our succession planning pillar partners today and pass the floor to both Danielle and Ryan Perkins, who will lead the session today. So over to you two.
Thank you, Cameron. My name is Danielle Zenier. I'm the founder of Zenier Financial Services. I've been in the industry since I'm going to say 1990, and founded branded Zenier Financial Services in the year 2001. Succession planning is very, very dear to my heart. And I'd like you to introduce my successor, Ryan Perkins.
Hi, I'll give a brief description of myself. So I've been with Zenier Financial for the past 8 years, and I was brought into Zenier Financial initially to be mentored to succeed the business. So the plan potential for me to succeed the business happened right away, and it was communicated right away, which was one of the reasons, or a big reason why I was so amped to go work with Danielle and be mentored, because I was working towards something right out of the gate. So as we present today, we have a couple slides that we're going to bring up for talking points. Please feel free to stop us and ask questions throughout the entire presentation. We might drive questions that didn't exist. Some of our talking points might drive questions that didn't exist. You're going to get both sides of this transition plan. Danielle as the buyer, founder, Ryan as the young new business owner that was mentored ground up. So please, as we move through the presentation, we would love to field as many questions as we possibly can. So we're gonna talk a little bit about our story and our transition. So we're gonna start with that, which for us, paints the picture of where we started and how we got to where we are today. So I'm going to pass it back to Danielle to talk about her journey and where she started her transition plan and how many years ago she started her transition plan.
Can you bring up that slide, Brian, please? Since I've been in this industry, my decision, I had heard a talk, is that from day one of starting your business, you should be always ready to be able to sell it and have a plan to be able to sell it. That always stuck in my mind. And way back many, many years ago, I made a decision that I would have my succession plan executed by the time I turned 60. And there again, to be able to slow down, it was the right thing to do for my clients. It was the right thing to do for the staff. It just was around the right thing. But as we all know, is finding a successor is not an easy process. It's not easy to find a person out there, especially today with the low unemployment rate. But is that I started looking for my successor back in 2008. And it did not happen till the year 2021. So that's how many years I've been on search for the right individual. Is that, as Ryan mentioned, he started back in 2015. And when you put it out there, and everybody always knew that I was going to have my succession plan. And I mean, everybody knew. The people around me knew. I talked about it with my clients. I talked about it with the staff, my family. So everybody was always on the watch for my successor with the right candidate, and as they know me. Is that when, and Ryan mentioned, in 2015, when he started with me, and you're right, is that there was talking of my successor, but when he started, neither one of us knew that it was going to be a fit. We didn't know if Ryan had never been in the industry. We didn't know if Ryan was going to enjoy the industry, if he was going to be good at it, if we were a fit together to be able to work as mentor, mentoree. So I'm going to say it's probably working after 3 years with us, is that we knew it was a fit, but is that we were always honest with each other. So is that as progressed time, and Ryan also realized this is something that he wanted to do. So it's almost like, I guess we dated before, right? We signed the contract. So, right, you take it from here, Ryan. Is there again, is your side of this?
Yeah, so as Danielle mentioned, I was a potential successor candidate when I got brought in. That's what was communicated to me. But from my standpoint, as the potential seller or changing careers or giving up another business to come and do this, yes, I thought I had a passion for the business. I thought I'd be interested in it. But when I first mentioned at the start, if Danielle wouldn't have communicated with me that I was that potential successor, I may not have made that decision to come and work with Zenier Financial. I may have, but that was, we'll call it a selling feature for me to come and work with Danielle and be mentored. But it wasn't only the successor piece of it, it was the mentorship aspect that she was willing to give. Danielle's looked at a couple different options to feed business. So we're going to talk about the couple different options today. You know that there's, and we'll dive into a little more detail as we go on, but how hard do you want to work to succeed your business? Danielle chose the path of finding someone not in the industry that had very minimal business experience, took them from minimal business experience to being able to run parts of a corporation to being a professional in that industry. So she put hours and hours and hours of countless work in, because some of the other experienced financial planners and advisors weren't the right fit for the type of transition that Zenier Financial was looking for. So as we plan our transition, it's quite important that we understand, are we selling to an outside source where we sign a two-month or 2-year contract to stay on and then we're done? Do we want to continue working in that business, and how do we structure that conversation? And how much extra time are we willing to put into mentoring that next step? Often people talk about the money, they talk about the legal process, and that almost overshadows everything else. But what we've uncovered through our process, and Danielle helped me uncover it prior, she had some prior information to it, I did not. As we were going through the point, she shared all that with me. But we've uncovered there's so many other components to the actual transaction itself that that's the harder stuff that happens in the background, as opposed to signing the contract and signing the piece of paper. And then transitions continue to be ongoing. So I feel Danielle had a really good idea of what she wanted. And we both think that's important as we move into transitions. She had a decision on what age that wanted to happen. She had a decision on if she wanted to work after. And that allowed us to properly start our transition and move into our transition. So in 2015, 3 years later, we had some piece of paper in place, an emergency transition plan, which we'll talk about. That allowed me to know that this is a serious thing. I will be succeeding this business one day. That also allowed Danielle to feel confident in the plan that we had moving forward, that if she continues to spend this amount of time on this individual, that it will benefit her from a transition standpoint in the end, and it will benefit me from the purchase of the business. But
So I'm going to take it.
Go ahead.
Take it back here, Ryan. Is that one of the points that Ryan made was, where do you find your successor and what does your successor look like? At the end of the day, I didn't know what I was looking for, but I didn't know if it was somebody that was already in the industry, somebody older, younger. I'm going to say mid-range. Obviously, it had to be somebody younger than me. But is that I didn't know what I was looking for. What I had to find was the characteristics of that person. Once I found the proper characteristics and the value, the morals and the values of the person, that's when I knew it was going to be the right person. You can't rely on yourself because you're going to try to find a you out there. You'll never find yourself out there. So one of the avenues that I went to is that before Ryan was hired, is that I hired a consultant that knew me well, knew our business well, knew my morals and values and what is important to me. And they interviewed Ryan, not me. So I had brought a few people through that process, and it's with working with that person is we determined together if they were a fit or not a fit. I think as I went through 4 or 5 people before Ryan came on, I entertained one at a time. I didn't entertain them all at a time, but one at a time. And that's why it takes time, and you need to start this early. And sometimes is that depend upon the industry that you're in or how big that you are. It could be that it's going to be one of your employees as well. That's just the right fit. And it could be, you're in your 50s, but this person's in their 20s, but there's something in them that you see that they could be a possible fit. There's nothing wrong with starting to have a conversation with them to be able to, and right, there's ways to have a conversation without being direct and saying, I want to sell you my business, but is find out what their ambitions are. You just have to start. That's the big thing. You just have to start thinking about all of this. And then once you get to that point, right, and I'm going to speed it up a little bit, is there again, once Ryan and I knew, is the big thing for Ryan, where we had to agree is, I agreed to mentor him, but at the same time, it's just as important that Ryan agreed to be mentored, because being a mentor is not easy to get criticized, or you have to change your ways, or and as a person mentoring, I had to be honest with him, because that's what's going to make him successful. It's had to be win-win. So in doing those along the way, and there again, and also for me, is to be able to also step back and what did I have to change in me in order to be able for Ryan to succeed. So it's a lot of work, but it's worth it, because we started these businesses, we grew these babies, they've become our babies, and we want to see them continue on as a legacy. So it's almost like moving on to your legacy, but you just have to put the time and the effort into it.
And by putting the time and the effort and leaving yourself enough years to change, you have the opportunity to interview several people where you might have made up your mind on one person, but it's not the ideal person, but that's the only person that you feel you might have. Without properly planning the amount of years of transition, You might make a rash decision on who your successor would be because you feel forced to make that decision from a retirement standpoint, from a money standpoint, whatever that may be. And different industries are different. So in our industry specifically, Danielle and I are the face of the business. We sit with the clients, we talk to the clients. So it's not like we can transition a business in the back end and have nobody know about it because we both sit with the clients. So we had to be just as open with communication with the clients as Danielle did at that time as anything, because that would help us transition that into a little bit of a smoother transition. So it's just vital that leaving that amount of time, you don't back yourself into a corner. You get the ability to think about it, slow down, make the right decision for you that you feel comfortable with. And some people might be hinged on their children buying the business. They might have that thought in the back of their mind and really want to focus on that and have to give that up at some point because that might not be the right fit for their transition either. And if that's the case and you do have children taking over, great. But having the timeline just leaves those options open. Okay, so you've heard us talk.
Sorry, just one thing. Even though it's your children, you still have to mentor them. So I've had my children obviously through the years work with me. And I always say is that today I have my business hat on and it's business. You're not my family. And sometimes just saying those words is that it helped to cut the line. As soon as we left here, then I became mom. But is that you have to be able to also mentor your children, but they also have to accept to be mentored. So it's no different than an individual off the street or somebody that you're going to hire that is non-family related.
Absolutely. Great point, Danielle. So you've heard us mention emergency transition a couple times. We're going to spend a little bit of time talking about an emergency transition plan for us, for our clients, for our team, for our families. This is what allowed everybody to feel comfortable and put a plan in place that if the unfortunate were to happen, we have thought of that. Right. So let's spend a little bit of time talking about our emergency transition plan and where we started. And I will be dead honest, if it wasn't for Danielle driving me to do an emergency transition plan, I never would have thought about it at all. I was so focused on the main transition and building my knowledge and building relationships that it wouldn't have been something that I've even known. You know, as the old saying goes, you don't know what you don't know. Danielle's helped me understand that you don't know what you don't know. So this is Danielle that drove the emergency plan. And I'd never really heard many people talk about it until Danielle mentioned it. We started that plan. So we started this transition plan 3 years after we were determined that I was the candidate and I would be the successful candidate to succeed the business. So Danielle said, okay, now it is time to put this in paper, put some funding arrangements in place, and let's get a plan. If something happens from now till then, what do we do? And when we say we had a plan, we had a detailed
This all
plan.
depends, sorry, Ryan. This all depends to what type of industry that you're in. Because we are clients and we deal with their money, our clients are just as concerned also of my premature death. I'm the financial advisor. So they were just as relieved to hear that there is a transition plan, an emergency transition plan in place. And the other part is our staff. That's right. Staff are an important part to any of our business, and they're the ones that helped us succeed in business, but they're also concerned. And as we age, it's inevitable is that the probability of us dying just get greater, as much we don't like to hear that. But the reality is that it could happen as we get older.
And often we're financial planners and we deal with lots of business owners. We really do. Not very often we see an emergency transition plan. For the last few that I've sat with, it wasn't something that was brought to attention or felt that there was a need. But again, for every party involved, and it appeals to a few different industries, it doesn't have to be maybe as detailed for certain industries as it would for others. But what happens tomorrow if that main owner dies? They have the relationship, they understand everything, it's all in their head. Do you have enough stuff on paper? Do you have enough stuff, a recorded electronic process? Are your process and procedures done? What does your team communicate? What do you communicate to the customers? Do you go public with it? Do you not go public with it? How do you approach that next situation? Right? So we'll talk a little bit about our emergency transition plan, but we urge everybody to put some thought into what happens tomorrow if that owner, my mentor, the person with the knowledge, the financial backing, What happens if they're not here, but our transition isn't ready yet? This document not only made Danielle and our families and our staff feel comfortable, it made me feel comfortable. And it was a contract and a piece of paper in place, a legal binding piece of paper that said, you will be the successor. So it was super important for me to continue my path with Zenier Financial. It was super important for Danielle and everyone else involved. It just kind of settled and helped us manage their emotions. So we truly do feel that it's vital. And again, it might be different structures for different industries, but it really helped us put the arrangements in place. I'm a young business owner, regardless of the success or doing well of the business. There's a really good chance that in the first couple of years, if Danielle were to pass, I do not have the money to buy her out. So how do we get around that? We've put funding arrangements in place for both of us that we negotiated together that would allow me to transition the business from her family to myself if something were to happen. And then again, we put funding arrangements in place that Danielle just spent the last 8 years mentoring me, countless hours, that if something were to happen to me, she doesn't have to restart the transition if she doesn't want to, right? So it goes both ways to some degree, because now if you spend a decade mentoring your successor and God forbid something happens to them, from a health perspective, what do you do now, right? What's the next step for you? And do you even have a succession plan any longer if that person is not there? So we needed to know both sides of it. And that was one of the first documents we put in place. Our legal team completed the document. We went as far as writing a letter for our team and myself as what would be communicated with the team and what would be communicated with our clients in our case. All the way as far as resources that are available for Ryan to continue running the business the way Danielle is, because maybe I was still a few years out from the level of knowledge required to run the entire operation at that time. So we put some thought into, well, what resources can we use? We've mentioned it to these resources that if this were to happen, would you be interested? And we put it on paper. So it was a step-by-step action plan in behind that allowed everybody the ability to execute if something happened.
And by having that plan, what it did is a couple things, because doing the emergency transition, doing a transition is just not about the money, but it's also is mentally a person needs to be ready to be able to take the next step in life, whether it's Ryan becoming a business owner or myself trying to slow down. So by doing the actual writing of it, you had to go through from A to Z on every point. And we got some guidance on it and what the emergency plan needed to be from a consultant that we used on in our industry to help with transition, as well as our legal team, some of the wording that we needed in there and some of the decisions that we had to make. But is that it helped to almost checkbox in my head things that I hadn't thought of or things I did, how it was going to happen. But the big thing that it did is that it forced Ryan and I to have conversations of how things were going to happen and what was coming up next that we had to make decisions on. So it wasn't just all of a sudden is one day to the next, boom, Danielle's gone. And right, Ryan has to take over. It's like, what if, right? You would do this. What if? Danielle, right? Or there again, something, Danielle, something can't happen to you. I couldn't do this. I say, Ryan, you can, and you've got some help doing it. Or it would be me trying to question myself, going, am I ready for this? Is this really what I want? So part of that is by answering and going through the emotional part. Like I said, it just checked off some of the questions and everything that we had along with it. And then once that plan was put in place and executed and signed, is basically we tucked it away. Because the only time it would have came out is that if an emergency would have happened, which was death or disability, severe disability. And then it was time now is that it gave us a roadmap to be able to keep on going is what do we need to do next to get ready for November of 2021. It's all yours, Brian.
So we've talked about a couple different dates. On our first slide, we had our date of transition was November 2021. We started the process June 2021. Let's just be clear on the process. We started the legal process and the accounting process in June of 2021. since that transition plan, that emergency transition document's been in place, and it made it a little more official for us. It made it official for us, I should say. We started transitioning the business then. Then is where I started taking on more of a Genier financial role and less of a planner role. So I did my planning, but we would continue to add Genier financial higher level tasks. And an example would be, I took over running the technology. Danielle said, here's your budget, run this piece of it. The decisions are yours. If it's a big decision, you have to go outside. Let's talk about it. If not, the decisions are yours. So I've actually been transitioning the business since 2018 because I've been helping with certain pieces of Genier Financial. And each year, as something would come up, we'd review it together. We'd see if it's the fit for me to manage, and we would take it, and we would continue to take it. So the timeline wasn't June to November. Okay, business transition is yours, it's done. What that did for us is it gave us the ability to get your feet wet, so to speak, run key pieces of it, and keep taking on more and more and more as I grew as a business owner, as I grew as a planner. That leads us back to that date of November 30th, 2021, when we did the actual transition on paper. What that did was that provided us a piece of paper. That piece of paper said the transition was done from a legal aspect, but Danielle and I are still transitioning the business now. Where Danielle still manages a piece of the business, and this is the deal that we worked out that we felt comfortable with. That's how we wanted to succeed the business. But as you're succession planning and as you're thinking about succession planning, going back to understanding what you want to get out of the succession plan is important, because we knew all along that date, Danielle wasn't leaving the country. Okay, Ryan, have fun. The business is yours now. I took on a little bit more at that point, and some stuff naturally you have to take on. And we're still in the process of transitioning the business from a management, from a running of the business perspective.
All it is, November 30th, 2021, it just made who was going to sign the checks. That's all it was, and whose decision was final. Before that time, it was my decision was final, even though Ryan took over the technology, right, and had the authority to be able to do, I still signed the checks. But what it did, and there again, that's why we're talking two sides of the coin. For me, is once I turned over that piece, I had to trust Ryan that he had the company back, that he was going to make the right decisions for it. Yes, if he decided on changing our client management system to another program and it was going to cost $12,000, of course, he talked to me about it. But as I gave away the technology part of it, I wanted to know less and less of it, because I had trust in Ryan that he was going to do the right decision for it. And at the end of the day, is if he made the wrong decision, when he started signing the check, he was going to have to buy a new one. So there's a lot, like I said, we joke around a lot at the end of the day on who signs the checks, but is that, again, mentally, is that you have to be prepared to let it go. You can't keep on controlling everything. It's no different than if you have children, as your children grow, you have to let them go as they grow up. And at some point, you've got to let them make their own decisions, whether it's good, bad, but you have to let them do it, because that's how they're going to grow. So the same thing with Ryan, is that I had to let him to be able to have the ability to make decisions based upon his knowledge of the business at the time. And some of them, today, he might change differently than what he decided then, but I trusted him at the time. But no different than how we made mistakes in our business, and we had nobody to catch us there. But Ryan, if he made a mistake, I was there to catch him. Or if it was really bad mistakes, so no, Ryan, we're not doing that.
Yeah.
So I'm going to take the Facebook an example. Is that when Ryan right away, right, technology, he wanted Facebook. Well, I was over on this side here. I didn't want it. Ryan wanted it to that and was ready to move on it, like, right, gun blazing. So we had to come to a compromise of implementation of it in the middle, from the old to the new. I had to give, but he had to give too. And that's where it was a proper fit. So is that, and there again, that's why it takes cooperation on both parts to be able to execute anything and the transition of it.
And some transitions, depending on the type of transition, might be a lot different than the transition that we're talking about. We still refer to ourselves as partners. Danielle kept the founder title, Ryan keeps the president title, and we still to this day run the business together. I appreciate that way. That doesn't mean that that's the right fit for everybody. Some people want out, they want completely out, and that's what they look for, is the complete out. But that takes a different level of planning than what we did, because we knew Danielle wasn't leaving. So the moral of our story always comes back to leaving enough time to do the strategy and trying to think of as many things as you can. And again, you might not be able to think of all of them, but as things come up, as pain points come up, communicate that with your successor, communicate that with your mentor. I always like to describe mentorship as thinking you're okay at something and then being told you're horrible at it and getting better at it. So if you strip everything else away, that's what mentorship is. But again, as a mentoree and as a mentor, what we found most successful and why we feel it was a successful transition was because we had an extreme high level of communication. We didn't hold things on. If we had to say something, we said something, and that helped us move to that next step. That doesn't mean if you're selling to an outside source and you're transitioning your business November 30th, 2023, and then no contracts on and you're done after that. Well, your transition is going to look a little bit different than what ours did. And that's okay. There's many different ways you can transition a business. And that's where your accountants, your lawyers will help that style of transition, because we consulted our accountants and lawyers as well. As much as Danielle knew exactly what she wanted and we negotiated a price together, we still took professional accounting and professional legal advice to make sure that we weren't offside on what we wanted to do. And we're going to talk a little bit more about that as we move through. But realistically, there's many different ways to transition a business. Communication between us was super important, whether it's an outside source you need to communicate with, an internal source that you need to communicate with, or you plan on having a similar transition to us. Communication has to be kept at the forefront. And that's how we feel it was a little bit smoother than what it could have been.
And when Ryan is talking about transition, so let's say examples, you decide that you want out totally, all that. So you got to set the expectations there, depending upon the type of business, with your clients and with your staff, because you were successful with your employees. Yes, we built it, we took the risk, we put out the money, right? Spent many hours being paid below minimum wage. But at the end of the day, is that everybody around us helped to grow that business. As much as that, the selling part of it, especially to an outside source, that's all to do with money, lawyers, accountants. It's cold, but it's if that's what you want, and right. But there again, is that the emotional part of it is helping your employees, your clients, your family, and yourself to deal with it. But no business is sold overnight. Even though, as Brian and I were ready for it, it still took a long time to be executed and the paperwork. So regardless of how you sell, how to do a transition, the mistake I made, I thought it was going to be done quicker than what it was. There's so many clauses and so many things, and we didn't even think about, you know, just for an example, is that December 1st came around going, oh shoot, Ryan, we need checks. Right? We have to go to the bank and get temporary checks. Well, the banks today only give you a little bit of temporary checks. We had to go to a printer and get some printed rush. You know, it's just all the little things that took longer than what we thought it would. And we were ready. So I can't imagine that if you did do any of the prep work before, what it would be like if you do the transition without a process. It just, and maybe in some ways it'd be better and quicker that you give it less thought, but all I know for us is the expectation, it took longer than what we thought it would.
Yeah, it did. And that's what we learned through the process. And that more or less came back between the two teams that we hired. But that also creates stress, because keep in mind, this transitioning is happening while you're still running your business. The business does not stop. So where do you find the time to do all the extra work? What do you got to give
Mhm.
up to be able to do the extra work? And what type of personal time do you give up to make this happen? Right? Being the seller, and I always like to talk about my experience, my level of knowledge wasn't as high as Danielle's from a transition standpoint. She had years of talking to consultants, years of talking to accountants, years more experience than I did. What I needed to do was I needed to trust Danielle, and this is me personally. It was so important to me that we had a strong relationship as we moved into this transition, because as we were going through the transition, it was moving fast. We thought we were prepared. There was things that were brought to our attention that we weren't 100% aware of when we thought we were aware of most. There was some of it that I didn't understand, but I had to make a decision on in the next 15 minutes, right? So I had to put utmost trust into Danielle, and Danielle being the seller, she drove a lot of the transition process. She did more work than I did through the transition process. I felt helpless to some degree because I didn't know what else I could do, but being the seller, she had more work to do, whatever that may be, cleaning up your corporation, transferring assets out, whatever that looks like for your corporation. She had a bit more work and more time taken to do it. And as you're trying to run your business, both of you are trying to figure it out. Emotions run high, and that's where you got to try and control your own emotions, because it's an easy way for a relationship to turn sideways if you don't properly control your emotions as you run through all of that. And we came to a point in time where Danielle and I had a conversation one day. We're both raising our voices at each other, and we're like, why are we doing this? Why are we letting this stress us out? So we almost called truce and said, no, this is not our relationship. We're letting the stress of the emotions run us high. We have all these things to do. And that was very important to continuing that smooth transition, because without that pause, that timeout, who knows what could happen to the future relationship? And then can you even consider that a smooth transition anymore?
Yeah, and you're right, Ryan, is at one point is that I was getting frustrated on the whole process. And there again, from the process, what I had to do, instructions from the accountants, the lawyers, but also is that our product provider, the licensing, jurisdictions, compliance, is that there was a lot that was controlled by me, because as the seller, I'm the one who had to execute it. And Ryan understanding some of it, he trusted me to do that. I was going to do the right thing for him. And everything that we did, we kept on saying it had to be win-win. Not everybody can do that. And not everybody, especially if you sell to an outside source, there's not going to be that. But it's still, at the end of the day, just beware, the seller's the one who has to execute a lot of it. And when Ryan was talking about the emotions getting high, is that we had done the transition, but there was still lots of things outstanding that we had to deal with. And as the now he was the owner, because it was past the date, he had made a decision on an issue that I wasn't pleased with. That's when I had to realize that I have to step back. I had to step back and say, okay, why do I think he did not make the right decision? So was it based upon right away that I wouldn't have decided that way, but why would I have decided that way? If it's going to hurt the corporation, then I'm going to talk to Ryan about it. If it doesn't hurt the corporation, I have to put my own emotions in the back, because it doesn't matter. So at one point he had made a decision which I felt which hurt the corporation. We had a discussion, like he said, we raised our voices, we stepped back, realized that wasn't the right way to be able to handle it. So we had to talk to each other in an honest way, say, Ryan, we're going to agree to disagree along the way. And that's okay. That's what business partners do. But it's nothing personal. It's just, we're both very passionate about this industry and the business. We just have to work through it. I said, we've got this. We can do this. We can be the poster child of transition. And just acknowledging it, that there's going to be some decisions that we're not going to both agree upon, bringing it to the forefront in itself is a success. Just there again, like our family. Families fight. Family raise their voices. But at the end of the day, we all eat a meal together. Right, Ryan?
Yeah, absolutely. Absolutely true. Absolutely true. And using that analogy and almost comparing it to personal situations in your life, like a sibling, like a parent, those discussions will happen. You're not going to love them every single minute of every single day, but you have a solid, strong relationship. And in the end, you're best of friends or you love each other anyway, if that's to speak. So Danielle and I are very good friends outside of our business relationship as well. And we're just lucky that that naturally occurred. Now, I've talked about having a Danielle to drive some of these decisions and having a Danielle to make these decisions. This is what leads me into my next point of it is vital that you have an accounting team that you're comfortable with and have a good relationship with, and vital that you have a legal team that you're comfortable with and have a good relationship with. So if I didn't have Danielle to lean on through some of this process and explain certain pieces of me that I wasn't aware of, this is where you bring your professionals in and you really lean on your professionals to give you the proper advice. They understand you, they understand your business. So we're in the relationship business. And this is why we wanted to partner with an accounting firm and as well as a legal team, because we know how important it is to have those strong relationships. That's where you go to your professionals and they help drive those conversations and they help drive a thought process along the way. So if I did not have a Danielle, and I still did lean on my the legal team and the accounting team, but you'd be focusing a little bit more on those conversations because they would explain to you this process. Your financial planner, if they're part of the business, could explain that process. So with those three stools of your business, they're the team that helps support that transition. If it's a cold transition, you're buying it off of an owner and they're leaving a month later, well, who do you call to help you? Really, really lean on your professional team. So we've always thought it was important to have that relationship with those professionals because they will help you through the transition. They will explain things to you. Lawyers can explain different things than accountants. Accountants can explain different things than lawyers. Financial planners might be able to help with a different aspect that they can't. So between the three of them working together on your behalf, that's what will create a smooth transition, and that's where you're going to be most successful is by leaning on those relationships.
And if by chance is that you are the buyer and the seller is no longer around, find yourself somebody who's going to mentor you in business. Is that right? My specialty being small businesses, I have learned so much through the years of different people in our community, different businesses, but every one of them, you take away something from them that they've learned. And as business owners, share with other business owners is that what you have learned. Sorry about that. What you have learned along the way and how you've made your mistakes. It's hard as a business owner to talk about business with people who's not in business because they don't understand the trials and tribulations of, right? When you first started business, is that your paycheck went uncashed in that drawer, or you're still working at 10 o'clock at night and the employees have gone home at 5, 6 o'clock. But you have to share that because when you start off in business, you don't know that's normal. That's normal being in business, that you're going to go through all of that. And when you hear from somebody else and say, yes, you can make it. You can do this. Yes, there's hard years, but keep on going at it. You know, and there again, if you need some help, by all means, reach out. Is that we owe it as, how can I say, the longer you're in, not the longer you're in business, every business owner out there, I feel is that we have to share other people out there, our trials and tribulations. It's almost our obligation. It's just like, right? I feel it's my obligation to teach other people in the industry that I do, because I'm so passionate about this industry that I want other people to be passionate. I have to be willing to share. If you're passionate about and you're in retail, then share that knowledge. That's how we're going to build up the business world.
So as we move on, we have another slide, and this is just a slide for talking points. We're not experts in the funding of the transition. We funded our transition in a specific way. If ever anyone wants to hear about the funding piece, they can reach out and we can have a conversation outside of it. But there's some ways where the existing business owner can hold the loan for the new business owner, go to an outside lender, a private lender, and other lending organizations. The advice I always give on this point is the Chamber of Commerce has great relationships with a bunch of different lenders and have seen different structures, that's where I say you focus on business organizations in your local community. They can help introduce, they can help broaden the horizon, they can help open eyes to what other options are out there. We've had many discussions with different types of industries, different types of business owners on what is the best way to fund the transition moving forward. So we're not going to spend a lot of time talking about this slide. We wanted to almost end with just some emotional backdrop that goes a little bit further than what we talked about. And we're going to really focus on transitioning the team, because often transitioning of the team isn't brought to the forefront. People assume that they got by a business, the team likes working there, they keep the wages the same, they keep the benefits the same, and everybody's happy. That doesn't necessarily always work like that. Because we started communicating so long ago with the team that this was a potential succession, in order for me to gain the team's respect, Ryan is the young business owner. I got Brennan as a 25-year-old kid, didn't know a whole lot. For the longest time, they were teaching me stuff, right? So now all of a sudden, you might take direction because you're forced to take direction, but you're not necessarily happy about it. So what I had
just
to do,
one note, Ryan, note that Ryan is not 25 anymore.
not even close, but I was when I started, right? But again, that's just me as what I see as a young kid. They might have seen me as a young kid because I was a lot younger than what everyone would be. So I felt that I had to earn the right to manage them as a team. If I just came in cold and wanted them to do it, they very well might have done it because that's their job and Danielle had good employees, but their morale might not have been as high, their efficiency might not have been as high, and we wouldn't be potentially driving as much of a happy workplace. Work is work, but if you can make work fun and enjoyable for people, everyone will be more efficient, everyone will be happy, the business will be more successful. So I've spent years doing what I needed to do, first one in, last one out, to build the respect of the team. And I saw that being very important. As Danielle transitions out more and more and more, I needed to earn that respect for the team. We've talked to other businesses before that thought, today I take the team, they do what I tell them, I'll give them a small raise, everything will go good. It really did not go in the direction that they thought it was. So we spent just as much time transitioning the team, and we've done it in a couple ways. So you've heard us say that Danielle still keeps a piece of the business and Ryan took on more of the business. What we needed to do was we needed to write this down on paper and clearly identify to our team whose task is task, who do you go to for this, and what transition is done. So even if you're the business owner and you have a manager in place, maybe you're taking on more roles than the existing business owner did. Maybe you're taking away from your manager. Maybe you're taking on less and giving more to the manager. The important piece is we had it listed, identified. Doesn't mean we weren't going to change it. We communicated that this is flexible and this is where we start. But this is what you go to Danielle for. This is what you go to Ryan for. This is what you can expect to hear from Danielle. This is what you can expect to hear from Ryan. Without that, we never want one single individual on our team to say, well, I have 4 different bosses now and not know who to go to, or Danielle give direction and then Ryan give direction right after in an opposite direction, right? So now we're spinning our team around. They don't know if they're going left or right, or if they're at a stop sign. So we thought that was very important. It started out where they still weren't sure. So we kept the communication line strong. We reiterated to a point where everyone was on the same page. Then all of a sudden, it was like a well-oiled machine. Everyone knew who to go to. They knew what to do. Danielle and I review that list on an annual basis. As I take on more, as the team takes on more, and Danielle takes on less or takes on different roles to help grow Zenier Financial, we make sure that we update our sheet, present our sheet, and really keep that at the forefront of how we transition the team going forward.
And what we have to play upon, just because my strengths are, and I'm going to say my strengths are the look of the office. I'm very particular how our office looks. I'm very particular if I see marks on the wall, the floors are dirty, stuff like that. Ryan doesn't see that. So that's one part that I kept on because that's really important to me. And it's not that it's not important to Ryan, but he doesn't see it. The other one was process. Our business, Zenier Financial, is very much built on, it's a process driven because of the transactions and everything involved in it, where that's the part that I kept, is making sure that the processes are written, whether they're written, where they're written, how they're written, that part of it, because it's a strength of mine to be able to execute those processes. Where Ryan's strength, you heard him, is technology is, and some of it he's going to have no choice but with time to take on, but doesn't mean that he has to do it. If he acknowledges that's his weakness, somebody else on the team is going to take it on who is strong at that, because it's not there. Again, he didn't hire you, so I can't expect Ryan to do identical to what I do. And this is where we're finding our strengths and weaknesses. And there's some things that I absolutely don't want to do anymore. I don't want to do performance reviews anymore. So that's right, Ryan's, whether he's good at it, likes it or not, that's yours, Ryan. Right?
Yeah.
And he's fine with that. And there again, that's where communication comes in.
Yeah, exactly. And we, at one point, we thought the transition with the team, we thought Danielle was going to take more of the team. And then naturally, based on how we communicated and the process we set up, when I became owner of Zenier Financial and that transition on paper was completed, they naturally started coming to me for certain things. And then that was an organic transition of the team that we thought we weren't quite sure it would work like that, right? And again, if you're selling your business and leaving, this conversation might not pertain to you. But if you still plan on working in as an employee, as a consultant, as a contractor, whatever that looks like, these are things that really helped our business continue to run. Because keep in mind, our team is majorly helping us run our business as we take all this extra time to get the transition done. And go ahead.
Sorry, Ryan. I just had a thought that if you're selling to an outside source and you're not involved in the transition for the period of a year or two that often are in selling to businesses, that you might want to, as the owner, because you care about the staff that you've hired, is check in with them, call them and ask them how it's doing. Is not to, and sometimes you just need to vent or they're saying, but you have to encourage them and saying, yeah, that's going to be normal when somebody's doing it. Or if they really change something, say you got to give it a chance. But encourage the people that you hired, because, right, usually if somebody's working, it's because they need the job, needs money. So that might be your way to be able to do it, is to help your employees transition, not necessarily the business itself, but help your employees to transition to that role. All right, go continue, Ryan.
No, to piggyback your point, almost everything we're discussing here is all part of the main transition itself. You've seen the other pillar partners being Maisonneuve and Dockings and MNP. By the accountants and the legal team having a good relationship and them working on each behalf of each owner, of each buyer and each seller, that part of the process, yes, decisions had to be made, but that legal team and that accounting team make that part of the process smooth. This is all the stuff in the back end as the buyer and seller, whatever industry you're in, everyone here knows their industry is better than anyone else. These are all things that people tend not to talk about, or we don't hear people talking about often enough. And some of it, we wouldn't have realized if we didn't do the transition ourselves. We wouldn't be able to have the same conversation if we didn't go through that experience ourselves. But between the legal representation that we have as a pillar partner and the accounting representation, they're going to drive the paperwork side of it. They're going to help you identify things that may stand out. But on another side, Danielle and I had a deal and we knew what we wanted. So yes, your legal team has a job to do, and I respect that very much, and your accounting team has a job to do. But it came down to a point with Danielle and I where we didn't want to add any more to the agreement. We said, you know what, we've changed our original agreement based on protection for each of us, and that was legal advice given. But we almost at one point said, no, we're going to sign the agreement as it's written. We feel we're protected. Do you feel we're protected? And that's the agreement that we signed. So to some degree, other people, outside sources, will drive you to want to change the deal that you have. They'll think it to be crazy. They'll think it to be not enough. They'll think you'll get challenged in different ways. But it all comes down to what you feel comfortable with. What is the value of something? It's what you're willing to pay for it, right? Just because someone tells you you have to sell this for 500,000, 2 million, 8 million, and you already have a deal negotiated in another way, that doesn't mean that it's not the right decision for you. It just means that they'll drive a little bit of extra thought. And if that's what you've decided and that's what you want to do for whatever reason, make that decision moving forward. Just make sure you're protected in the back end. Ask the questions of protection. as opposed to focus on the numbers or focus on that transition. There's been a few outside sources to me and to Danielle that have said, are you sure you want to do this? It sounds a little bit crazy. And yes, we want to do this. This is why we want to do this. And we stuck to our guns to some degree on the pricing, the payment structure, whatever, something similar to that. So just focus what you want, be detailed with each other, take professional advice. I'm not saying don't take professional advice, but just really make sure they're not pushing you in a direction that you don't feel comfortable with as you move through this. And that brings up pain points along the way. Danielle and I have talked about a few pain points, but what we feel we do really well is if a pain point comes up, we deal with it and we move on.
Yeah.
Right.
At the end of the day, and we'll have to wrap things up soon, Ryan, but
Yeah.
at the end of the day, you have to trust. For Ryan and I, our succession, I'm going to say, is successful because we trust each other. We both want it to be win-win. Is that I feel comfortable as the seller that I can be here as long as I want to be here. I don't feel I'm being pushed out the door. I promised Ryan another 10 years. And there again, he keeps on telling me that it's 10 years from today, every time I say that. But at the end of the day, is that it has to be win-win. And you both have to be able to be good with it.
Yeah, absolutely. Cameron, is there any questions that we could answer?
I was patiently waiting in the background for my cue. I didn't see any questions come through as we were moving in, but I think it was really great to have a candid conversation, particularly between the two of you. Given where you are, the story and the timeline by which you both are following, and I think that it's those types of candid conversations that will sort of remove the stigma, the taboo, the barriers behind having those initial conversations, especially when you're trying to identify your successor. For Danielle, given the fact that you are the founder of your own firm, and I hope you don't mind me asking the question, is there a level of hesitancy when you're looking, because you've created this baby, for lack of a better term. What were some of those hesitancies, and how are you working at removing yourself emotionally from your business?
That's the hard part. I'm still trying to figure out. The emotional part I have to keep in check. Okay. And there again is that just like I put on my mom hat and my business hat, I have to put my business hat on first. Because of I guess you want to say the industry they're in, at the end of the day, I have to protect my clients. I have to protect my clients as I'm getting older, is that the probability is I will die, or like I can't see myself still being here at 80 years old and offer good financial planning. So that's what it is. It's always been about what's best for my clients. And so that's where I have to keep the emotions in check. And like Brian and I, when he makes a decision, okay, why does it matter to me? You know what? Doesn't matter. You have to let it go, Danielle. It's not easy. And sometimes it hurts when Ryan got asked to go to meetings because all of a sudden he's the owner of Genie Financial and it should be me. Right. So, but it's just a lot, but you know what? It's fun. It's fun for me to uncover the next step in running of this business, that I get to concentrate on different areas that I never had time to do before.
I think that makes an excellent point. And Ryan, I will get to a question for you, but I guess Danielle, when you initially had your, and we all do it, we have a quintessential idea as to what we feel our successor may look like or resemble or their values. How did that change from your initial, conception of who your successor might be to now obviously having Ryan?
Great question, because initially I thought I wanted somebody in the industry. But is that I quickly learned for me is that what was best for me to find out somebody who did not have any experience and to bring them through our process. But it just meant a lot more mentorship and a lot more hours upon my part. So spending hours helping Ryan grow as a person in this industry and still running of the business. So for quite a few years, I spent a lot of hours.
Which means there's a higher likelihood of getting what you want out of the transition, right? Putting in the time, putting in the work, mentoring that person. You just have the better ability to transition the business like this, as opposed to bringing that outside source in who's already successful, but wants the world in order to buy that business. So you might not quite be able to get what you want. one way or the other.
Compromises are a challenge regardless of whatever relationship you're maintaining. That actually leads me to my next question and the flip side of the coin to keep the theme going. Ryan, what did you find, as somebody who's potentially entering a new career path or recognizing a potential business acquisition opportunity, what was the hardest point for you, or the hardest component to having those open discussions with them?
Okay, so when I started, it was being new, being mentored, understanding that I might potentially buy this business, but still everybody was taking me by the hand, walking me by the hand. So I'm like, well, I'm going to be this business owner, but I know nothing. Where can I find value? Where can I offer value? Where can I build myself up to have where I feel that I'm contributing value? And then it's the anxiety or the emotions around keeping up to a business that was successful for 35 years. Not wanting the team to go backwards, not wanting the business to go backwards. And you know how the old saying goes, there were big shoes to fill. Will I be able to fill those shoes? Will I be able to be as successful as Danielle? It might not be the exact same thing, but we still want to drive success and drive good business in the Timmins community. So that was always a fear / driver of mine. And I carried that fear as I moved in. And still at some point to this day, I carry that same level of fear and anxiety. And that's what drives me to continue wanting to do what I do. Can I replace what Danielle's done? Can I do better? Can I do worse? How can I make the next step of Zenier Financial as successful as the first phase of Zenier Financial?
Absolutely. And, not only are they big shoes to fill, but I have no doubt you'll fill them. They'll be Oxfords and perfectly polished, but I'm sure you'll do perfectly fine. So I wanted to take this opportunity to thank you both. Thank our attendees, of course. I think this was an excellent insight. We were almost, a fly on the wall with the conversation between the two of you. And I think that was extremely helpful. I do want to also extend a special thanks to Zenier Financial, Danielle, Ryan, for taking your time, but also to Mason of Dawkins Lawyers, Renee, who I see is joining us, as well as our partners at MNP for their support of the succession planning pillar as well. So we will be hosting a session with Mason of Dawkins Lawyers to sort of bring this complete circle. We've had MNP, we've had Zenier Financial, now we're going to hear from the lawyers as to sort of the complete circle within the entire transition process, as well as a few other modules coming up. So be sure to keep an eye out in your inbox. And beyond that, I want to thank everybody for joining us once more, and have a really great day. Thank you.
Thank
Thank
you.
you.
Take care now.
Have a great day.